The world was on fire, politically, financially, emotionally, trade wars, market swings, Twitter meltdowns, Bitcoin losing 80% of its value, everyone panicking, everyone with an urgent opinion, everyone absolutely certain the world was ending. And Warren Buffett, he was reading annual reports in Omaha quietly, like a man who had no idea what a smartphone notification even was. Let's remember what 2018 actually felt like. You woke up every morning to news that felt like a disaster movie trailer. Trade war with China, real. Brexit still happening. Somehow, yes. Trump tweeting at 3 a.m. every single day. Avengers. Infinity War dropped and half the internet was in therapy. The World Cup happened and for 3 weeks nobody talked about anything else. This was the noise Warren Buffett chose to ignore. Now, a normal person in 2018 would open their portfolio every morning, see a red number, feel their stomach drop, and do something, anything. Sell, buy, call their broker. Google, is the economy collapsing? That's normal, that's human, and that's exactly what Buffett thinks is your biggest problem. Because while everyone was reacting to 2018, Buffett wrote a letter explaining why almost nothing happening in 2018 actually mattered. And the argument he made was so simple, it's almost insulting. Here's the first delusion Buffett exposes. New accounting rules in 2018 forced companies like Berkshire to report their earnings differently. The result? One quarter, billions in profit. Next quarter, billions in loss. Same company, same employees, same factories, same everything. Just different rules about how to write down the numbers. Buffett was basically watching financial media have a full existential crisis over accounting rules. He literally had to write a public letter saying, "The business hasn't changed. The numbers just look different. Please calm down." Which, if you think about it, is a very polite way of saying, you people are exhausting. Here's a Buffett classic. He tells investors, stop looking at trees, look at the forest. Simple, right? Except almost nobody does it. Most investors look at quarterly earnings, tree. This week's headline, tree. What some analysts said on TV, tree. Buffett looks at, does this business produce real money? Will it still be relevant in 20 years? Is the core engine getting stronger? That's the forest. And here's the part that should bother you. The news industry, social media, financial Twitter, all of it is specifically designed to make you stare at trees 24 hours a day, 7 days a week, because anxious people click, calm people don't. And Buffett is very, very calm. Now we get to the part where Buffett gets genuinely funny. He starts talking about adjusted earnings. This is a thing companies do. They take their real earnings, remove the ugly parts, and present you with a cleaner, prettier, more optimistic number. Stock compensation for employees? Removed. Restructuring costs? Removed. Basically anything that makes the numbers look worse? Gone. And companies have very professional names for this. Non-GAAP earnings, adjusted EBITDA, core performance metrics. Buffett's response to all of this, he quotes Abraham Lincoln. If you call a dog's tail a leg, how many legs does it have? 5, right? Wrong, still 4. Calling it a leg doesn't make it a leg. And the beauty of this is, Lincoln said this in the 1800s about completely different things. And Buffett had to use it in 2018 because Wall Street still hadn't figured it out. 150 years later, progress. Here's why this matters for you. If you're evaluating a company based on adjusted earnings, you're not evaluating the company. You're evaluating the story they want you to believe. And the people who are very good at telling that story are the same people selling you the shares. Keep that in mind. We're coming back to it. Now, Buffett zooms out, all the way out, and he tells a story. 1942, he was 11 years old. He invested $114, his first investment. Now here's the math that should make you put down your phone. If instead of picking stocks, he had put that $114 into a simple index fund tracking the US market and done nothing. No trading, no analysis, no Bloomberg terminal, nothing. By the time he wrote this letter, over $600,000. Meanwhile, people who bought gold in 1942 as a safe haven dramatically underperformed because gold doesn't do anything. It just sits there, looking yellow. Buffett's point is almost poetic. Betting against America has historically been the worst investment you could make. Not because of patriotism, because of math. So what was the real danger in 2018? Not the trade war, not the market drops, not Bitcoin. It was this. Attention is a finite resource. Every minute you spend reacting to noise is a minute you're not spending understanding reality. And 2018 was engineered, deliberately engineered, to steal your attention. Breaking news that wasn't breaking. Crises that resolve themselves, opinions designed to make you feel urgency. Buffett essentially built a firewall around his brain. And the funny thing, his firewall looked like boredom. Here's something most finance content won't tell you. The strategy Buffett is describing is incredibly boring. Ignore the noise. Focus on fundamentals. Wait, that's it. No secret formula, no algorithm. No proprietary edge, just patience. And that's the joke, really. The most successful investor in history, his main competitive advantage is that he refuses to be entertained by the market. While everyone else treats investing like a sport, he treats it like watching paint dry, on purpose. So here's what the 2018 letter is actually saying to you. The world will always be noisy. There will always be a trade war, a political crisis, a new technology everyone is panicking about. And every single time, you will feel like this time is different. It isn't. The question Buffett asks, the one I want you to carry out of this video, is, are you investing in reality? Or are you investing in whoever told you the most convincing story this week? Because the forest doesn't care about the memes. The forest doesn't care about the tweets. The forest just keeps growing. Remember this, 2018 wasn't confusing. The people were confused because they listened to everything and filtered nothing. Buffett's real edge isn't intelligence. It's ignoring quality, knowing what deserves your attention, and ruthlessly discarding everything else. In the next video, we go into something even more dangerous. Why cheap stocks can destroy your portfolio faster than expensive ones. And how Buffett learned to avoid value traps, investments that look like bargains, but are actually just cheap for a reason. Because in investing, not everything that's on sale should be bought.